people don't talk enough about. They talk about how to get your first deal, but not what to do when you buy that deal.
Day in the life of an asset manager, you've now acquired the asset. What does a day-to-day look like for you?
There's opportunity everywhere, but that's what I prefer. I prefer a landlord-friendly state.
What percentage of your analysis on projection of rents comes from the property manager versus your own research or some other source? Since asset management is your superpower, I figured we would kind of couch this episode in sort of a masterclass format, so folks can learn about why it's important, how people can improve on their asset management, because I definitely believe it's one of the most important things. So let's just start with the basics and then let's move our way through it. But let's just start off with what is asset management, Gary, and how it, maybe more importantly, how does it differ from property management?
Yeah, that's always where I start because people get confused. So property management, it runs the day-to-day on the property. If you have a big property, you're probably going to have a property manager, maybe a leasing person. You have a maintenance tech and supervisor on smaller properties. Maybe you don't have people on site, but they're the ones that take care of the day-to-day. They're the ones collecting rents and whatnot. As an asset manager, you're in charge of the business plan, executing on it, dealing with pivots, because just because you have a plan doesn't mean it stays perfectly along that plan for the years that you hold that. You're also doing financial analysis on your property, investor communication, when to sell the property, which is very, very important. More important than people realize, picking the right time to sell, and managing the manager too, because if the manager isn't getting managed, they're not going to take care of that property nearly as well as someone that's on top of them. So that's really, really important. And I can go into some tools on how to manage the manager.
Yeah, for sure. And I guess my next question was going to be, what is the role of an asset manager? But maybe more fun would be, give me the sort of the day in the life of an asset manager. What does that look like? Maybe start even before you acquire the asset. What does the day-to-day life of an asset manager look like?
Yeah. So, well, before you acquire the asset, you're going to have a business plan for that property. When you underwrite it, what any value add that you're going to do to the property, branding, anything different that you're going to do to the property. That's really it goes from the acquisitions person to the asset manager, and it could be the same person, and you could be doing all of those roles, quite honestly. So once you take over the property, your team is implementing this plan, and so you need to make sure that you've gone over it multiple times with them beforehand. Are we on the same page? Are you seeing anything differently? And implementing that, and really having a time tracker with that. So if you're not tracking the progress of your business plan, it's not going to get accomplished or in the time that you want. So it's really important. Time kills all deals, particularly any new development deals, because that you have a very small time window to execute and get that built and get that either sold or refinanced into a cheaper loan. So really important to track all the things that you're trying to accomplish and what that timeline is. And typically it takes longer than what you plan, but if you're staying on task, and everyone that is accountable to that task has access to that, and we like to use Google Sheets, most likely it's going to get done on time.
You mentioned working with the acquisition folks. Do you guys work pretty closely? These are the acquisitions and the asset manager. If they're not the same person, are they, especially when you're acquiring the asset, work closely?
Yeah, on my team, it's the same person, because I like to, if they're underwriting it and they're coming up with a plan, I want to see it all the way through. A lot of, much bigger companies. So there's a team of 6 for us, but, real bigger companies might have different people. Smaller companies, that one person might be doing it, but you've got to make sure that they understand the business plan and that they'll be able to execute it. Because if they're not aligned, it's going to cause havoc. Now, you're already going to have plenty of curveballs that happen along the way anyway. Nothing goes perfect. It is a business. You're going to have highs and lows. So if you could be aligned on the business plan from the start, that's going to really help give you a better chance for a success.
You mentioned something that ChatGPT did not bring up, which is sort of your company structure a little bit, because you said something interesting that caught my eye, which said my asset manager and acquisitions guy or gal is the same person, which means it's not you. So give me a little bit about, so how big's your team, and what's your role in the Day of Break Capital right now?
Yeah, so when we started out, I was doing everything. But what worked to get me to that point wasn't going to take me to that next level. And so I needed to hire more people. So my first hire was an executive assistant. And she's since grown into operations manager. She'll handle all the subscription docs for investors when they have questions, kind of walk them through all the behind the scenes zaps from if someone goes on our website, then it goes all the way to like active campaign. She sends out the newsletters. I work with her on that. Um, all like the behind paying the bills, all the behind the scenes stuff. Then years into my business, I hired an investor relations person. So instead of me fielding all those calls, it freed me up um, to handle the acquisitions and the asset management, which I was doing. And then I eventually I hired that person so they can handle the downloading of all the documents, all the loan covenants, tracking all the data from the deals that we underwrite, um, to working with the property managers on a weekly basis. We have our weekly calls. So all of the work that wasn't the highest level of my time that I wasn't working on. Then I also hired an operations director, someone higher up than my operations manager. So he's working on PPM docs for new deals. He kind of built out OKRs, objectives and key results for our team. And he helps manage data for us and really implements new strategic ideas, whether it's AI or anything else. I give it all to him to kind of like take us to that next level because we're always looking for an edge over um, other people doing the same thing. And then we also hired um, one of my biggest investors. I think he's been like 8 deals. He also became an investor relations person as well. So he's creating a lot of content and brings on investors to our team as well.
One of my mentors and coaches is Dan Martell. He read a book called Buy Back Your Time. I don't know if you've read it, or if you haven't read it, I would highly recommend you. But he talks about this replacement ladder, which you kind of described a little bit, where you're at the beginning, you're doing everything yourself, and slowly but surely you're replacing yourself and moving up to that ladder. And executive assistant is 100% probably the most leveraged hire that you could make. Okay, so you mentioned something about weekly meetings. That was kind of where I was going next. Like, day in the life of an asset manager. You've now acquired the asset. What does a day-to-day look like for you at managing the asset or your team?
Yeah, so on Mondays we have 6 of our properties. We have a call with the property manager and our regional. It's 15 minutes long, and we'll go through our data, and it's one after the other. And on our weekly sheet that we have, it's on Google Drive, and it has occupancy per unit. It has a spot for delinquency, renewals, um, leads, where they're coming from, how many turned into leases. So all of our KPIs are on a weekly sheet, and there's a tab each week. We add a new tab. So if we've had a property for 3 years, we're going to have over 150 tabs on it. We're also going to have our task tracker. So all the things that need to be done at that property, we're tracking that. We also have a tab for our CapEx. So we track what our initial budget was, any draws that we have, and as it goes along, because we want to make sure we have enough money. Even if we've done everything, we've run out of money, but we have our business plan is to hold the property for another 2 years. That's a problem because we now have to rely on cash flow to fund CapEx, and you don't want to be in that position. So you want to make sure you're tracking your CapEx along the way. We also have loan covenants. It's very important these days to really keep track of your loan covenants. If you have a debt service coverage ratio test on a quarterly basis or a yearly basis, are they looking for when are the reports due for net worth and liquidity? and any other documents that they require. We just have it all on this Google sheet for that property. So all of our information that we need is on this. And so the my asset manager is making sure the lenders, everyone gets what they need on a regular basis, whenever that is.
That's amazing. This is one of my selfish questions, but I see this question almost weekly now. Questions about technology and what technology to use and apps and all that stuff. And I've heard you twice now say you're using Google Sheets and Google Drive. Is that all manually inputted by your team, or do you have some tech in the background that sort of feeds that spreadsheet, on a weekly basis?
It copies it from week to week, so it's fairly easy to use, and everyone can use it. I've seen people have too much tech and then they don't use it, and or they have 5 million different apps. Like, I'll get pinged on WhatsApp, on Facebook Messenger, on text, and all these different things. It's like I'm always about simplifying it and keeping it basic so everyone can use it, and it's very easy to use. So um but then I have someone else really work on the AI. Try some different things. What do we want to implement? What works? I don't want to be the guy that's testing everything out. I want someone else to be doing that on my team. And then, because we're always looking for innovation, but innovation that everyone can use, that is like I said, simple.
Yeah, and I'm a big believer that you figure out the systems first, even manually, just figure out how to do it first. And then once you've got the process in place and you know how to do it, then you can bring in tech because now you know what you're looking for. All right, you talked a little bit about it, but my third thing here was the decision to sell. So that's obviously an important part. So we talked a little bit about before the asset, during the asset. Now it's time to sell. Talk a little bit about what that looks like, and what factors go into your decision to sell.
Yeah, that's set up from the beginning of what your business plan is. Have you executed where the market is? So we're always looking to buy if the deal's right, or sell if there's a good time to sell. So being in the market consistently lets us know where we are, what our property's worth. Also talking to brokers, getting a BOV. We're big value add players, so we've really juiced the return for investors right away. We've averaged a 40% bump in NOI in the first year across our portfolio. So when the market was doing fantastic, we had all these tailwinds. We were selling properties within 2 years just because we've implemented our business plan. The market was on fire, and we were locking in gains for investors. Now that market has since cooled down, so we just sold a deal a few months ago that was 39 months. That was the longest deal we've held so far, and other deals will be longer. So it's making sure you have the right debt on your deal so you could sell at the right time. You don't want to have to sell when it's not a good time.
How often do you take a look at the possibility of selling? Is that like a monthly, quarterly, weekly, daily?
Yeah, I would think for us it's probably more semi-annual, because we want to be way ahead of it, because you'll want to sit down with your broker and make sure you have a plan. So one of our first property, we executed everything on the business plan, and there wasn't really any meat on the table. So we met with a broker at the property, and we came up with the idea of having kind of like a premium renovation. So this was a 42 unit. We already upgraded all the units. So we added a backsplash, and maybe it was nicer fixtures. I forget. It was only like $1,500 more, but we did it for like 6 units, and we got an extra $150 bump on that. And so we sold the idea of a value add to the next buyer, but we had many months to kind of implement that plan to maximize the value. And so it's always good to be talking to your broker way in advance, and timing it if you can. If like you're gonna have your occupancy is gonna peak, maybe your expenses are gonna be on the lower end, maybe that's a good time to sell, because you can get a little bit more juice out of your property.
I was going to ask about why asset management is so important, but actually before I get to that, talk a little bit about the rate caps that have been going on these days. How does that generally play into your decision to sell, and how have you navigated this whole rate cap? Not
Yeah, it's
fiasco. It's not
been
really a fiasco. It's just been so expensive, and it's just been an issue. How have you guys been navigating that?
Yeah. I mean, thankfully, we hadn't had any deals that were expiring. And the rate cap basically keeps your loan rate at a lower level depending upon how much you paid and what that is. And it might go up, let's say your rate was 7 and it might keep it at 6, and then the next year might go to 6.5, then 7. So a lot of people that bought, at the end of 2021, 2022, over leveraged and had their debt go higher and higher. And it's burdensome. I mean, I've had some deals where the debt is higher than I expected, and certainly the rates have been higher and longer than anyone could have expected. And we finally got a reprieve a few weeks ago, and we'll continue to see a reprieve. But yeah, some people definitely went over their skis, and whether they had capital calls or foreclosures, some were able to kick the can down the road and are in trouble. And it was unfortunate. As the cap rates were compressing, people were getting cheap debt and a ton of leverage. And when if it stayed that way, that would have been fine. But when the interest rates kept going up and were extended for a long period, then a lot of people suffered a lot of pain.
Yeah, circling back to the spreadsheet thing, Rocky was asking, do you have any specific spreadsheets that you use for a rundown with your property managers?
We just go through our KPIs. So we're going to look at occupancy per unit type. We don't look at it as a whole. So if we're near, 95% or above for a particular unit type, maybe we increase the rent $25. If we are maybe at, below 90%, maybe we decrease it $25. And we've had to be very price sensitive. I'd say more so in the last 8 months than ever before. So if someone's offering a month concession or 2 month concession, all of a sudden our occupancy will go down pretty quickly. We need to be aware of what other people are charging, where we've never had to focus on that as much. And what we do is we track every time we do a price increase or decrease, we put that in the tracker so we can see when did we do it last. So the next week, you know, if we're still not increasing rents, well, do we need to decrease it another $25? Do we hold steady another week? If we increased it $25, have we made any leases? And if not, then that should be something that we should be concerned about. If we go a month, we had increased the rent and we're not getting any new leases, then we pushed it too high. So we need to bring it down. So constantly tweaking that. We want to see where renewals are. Are we about 75% renewals now during these times when you're not getting such premium rents? You want to really push your renewals. So that's a KPI that we track a lot. Delinquency obviously has kicked up, so you want to track that. And you want to it's not always a straight line up to the right, but when you do new leases and do renewals, you want to make sure you're increasing that incrementally every month. And I mean, in the last 8 months, there are times when our renewals or our leases went negative, unfortunately, just because we had to lower our rents based on the competition. So it's constantly tweaking, constantly seeing what's working, and that's why we are consistently doing it on a weekly basis. You can't wait a month, you can't wait 2 months. You've got to consistently do it, even if it's a 5 minute call, a 10 minute call. You got to stay on top of your property.
Yeah, you mentioned something about one of the KPIs being the occupancy per unit type, not as a whole. Is that common, or is that something you guys is a little bit unique to you guys?
I think the good operators are doing that, you have to. Every unit type, it could be different. I mean, you might have something on the third level, and if you don't have an elevator, I mean, that you might need to have lower rents for that than let's say the first floor. Maybe it's a view, like we're in Tucson. I mean, some have mountain views, so maybe you can get a little premium. So um the good operators are measuring all the different unit types. I mean, maybe it's a 2+1, a 2+2, all the different different things, because they're going to be different sizes. So you've got to look at
How
it
many?
differently.
How many do you have? Because I was just thinking, oh, one's a 2 bedroom, one's a 3 bedroom. Maybe there's two or three, but you bring up great points. One's got a view, one's got it's an elevator, doesn't have an elevator. First floor is maybe more perceived as more dangerous than the second floor. Like, how many different types of units do you track?
It could be, well, and you might have unrenovated and renovated, and then like a premium level too. So I mean, it could be 10 different unit types more on a big property. It all depends on your size of property, but yeah, you could have quite a bit of different unit types.
So I was going to ask you about the KPIs. So you mentioned a few of them. So occupancy per unit type, renewals, delinquencies. Any other KPIs that you track on a weekly basis?
Work orders, because you want to make sure things are getting fixed on a consistent basis. You want to know ready units on 100 unit property. We might have, I don't know, let's say 7 units available to lease. But if 0 are ready, then I don't. No one can move in and no one can look at those apartments. And so my leasing has like frozen. I can't get anyone else in there. So I want to make sure I've got ready units available on my property. And if I want to also track how long it takes to get a ready unit. So if it's just a turn, maybe it's a couple days. If it's a complete renovation, maybe it's a month. But I want to track those and see how long it's taking. Um, because if it's taking too long, then and we're so busy, I might pay for a sub to come in and maybe paint the property or paint the like 5 interiors to speed it up so I can get new residents in there and I could start collecting rent. So you just want to stay on top of that.
Charles was asking, what type of tenants do you have? Are you in the B class, C class, A class?
Yeah, I have some C's and some B's. Um, that's typically where we operate.
And I assume that's a higher delinquent, because Christina was following up with that and saying, what are your tips for dealing with consistent above 7% delinquency rates when using third party property managers? And by the
Yeah,
way, she
it's
loves and she
definitely
loves and
delinquency.
sorry, Gary, and she loves your book.
Oh, thank you. Delinquency has definitely kicked up over the last few months. I mean, we're at like 12-month highs. Um, I mean, as we know, the job market hasn't been has not been good of late. They've revised the job reports every single month. So people are losing jobs and people are getting delinquent, being delinquent on their apartments. There's some cities and states that have assistance. So you want to make sure you're helping your residents because sometimes they don't know how to navigate that. But it really starts on the front end for your residents to making sure they're qualified to rent your apartments. And that's why if we're giving away rent for 12 months, get a unit free, I want them paying on the front end. I want to make sure that they're able to pay and give them their freebie down the road. You want to get them in the door paying. Um, and as far as delinquency, yeah, just as soon as you can. Every city and state is different, but in Tucson, as soon as that 5 day they haven't paid their rent, you want to serve them a notice. You want to stay on top of it. You want to train your residents to pay on time.
Are you one? I mean, you're obviously in Arizona. Are there certain states or markets you're not going to invest in because it's so difficult to get delinquents out?
Yeah, we're in California. Obviously, it's a very renter friendly state. I prefer a landlord friendly state. Um, it just gives us a lot more advantage if someone's not paying or they're not taking advantage of programs out there, then we can get them out. So there's there's uh, there's opportunity everywhere, but that's what I prefer. I prefer a landlord friendly state.
We talked a little bit about property management. You want to talk a little bit about how do you evaluate and select the right property manager?
Yeah, so property management company is very, very important. Um, you want to make sure that they operate in your market it's very hard for a company, and we've had companies before that we've worked with, and they're like, "Oh, you're going in this market, we'll follow you there," and they had no infrastructure. That doesn't do me any benefit. So the company we work with in Tucson, they manage 50 properties, so they have great economies of scale for our buying power when we need renovations. They're working with a lot of different vendors because if one vendor can't do it, maybe another vendor can, and we're able to get different bids on stuff. So you want to work with a company that's got a strong base in whatever market that you're working with. You want to go visit those properties that they're working at too, that are similar to the one that you may be purchasing, to see, hey, is it clean? Are the staff friendly? Are they doing the things that you want to see done at your property? So that's a really good way to find a good property management company, um, and making sure they push back too. If you just have a yes person, that's not someone you want to work with. You want to make sure that they say, if you say, hey, I think I can get $1,200 for a two-bedroom here, and they just yes you, that's not what you want to hear. You maybe they say, well, I think I can get you maybe 1175, or maybe you can even get 1225, and you want to be able to back that up and have comps to support that. That's someone that you want that give and take, because if you can't trust them to push back, that could be a real problem when you're trying to execute on your business plan.
Do you get your own property management team in there, or if you're buying a property that already has a property management team in there, would you consider keeping them if they've done an okay job?
Yeah, I mean, there have definitely been deals where I bought a property and we're using the same property management company that was already there. And it's just because of the trust I have with the property management company. We might switch out the property manager that's on site. Um, but that's the case right now for a property we have under contract, that it's the same property management company. But we understand what worked at that property before we're taking over, and what didn't work, and so we can adjust. We didn't see like it was poorly managed, but there are definitely um times when we're buying a property, and the property management company in place wants us to use them, and I'm like, no way, we're gonna go with the company I know, like, and trust, and that's a reason why I'm buying the property, because you have done such a poor job.
And who do you use? Because obviously, when you're doing the pro forma on the rents, I assume you lean on the property manager who knows the market pretty well. Is that what percentage of your analysis on projection of rents comes from the property manager versus your own research or some other source?
So we'll do all of our own underwriting on the deal. We'll also come up with rents ourselves. And then we say, hey, what rents do you think we can get? And I want to see your underwriting for expenses and income as well. And if we're off, then we kind of talk through like, hey, how'd you get that number? This is how we saw it. And we find, maybe we just go with all, okay, if this is what you see, this, we're going to go with this, or maybe we find a middle ground, but we want them to do their work separately than ours, and see where we differ, if at all.
Rocky's asking for the going rate for property management team. Is there like a general price? Let's talk about the market. Obviously, I assume it's market dependent, but what are they generally charging?
Yeah, I mean, it all depends on your size of property. So if you're, let's say, 100 units to maybe 200 units, you're typically going to pay about 3% of the income generated per month. And then you're also going to pay for the salaries on that property. So like your property manager, your maintenance supervisor, and any of the other staff. And then there's, upsells potentially if you're using them for other marketing pieces, or other like business intelligence or things like that. But obviously the smaller the property, the higher the rate is.
Whatever the reports that you're looking for from the property manager, is there sort of your standard, and then how often do you get them from them?
Yeah, so we'll get monthly reports. So the first section will have budget to actual. And so we want to see where things deviating. It's not going to be a perfect, like you're going to beat everything. Some months we might be better on income, some months we might be better on expenses, but you want to see trends. what's trending in the right direction, what's trending in the wrong direction. Then we'll get a T12. So you can look over the last 12 months if you've owned the property that long to see where are your better months and how does that play out. Um, then it'll have your balance sheet, your cash flow statement, your general ledger. So you want to go through all of that stuff because you never know when something can be um, misallocated. I mean, on our first property, they mistakenly charged us. It was for like a um, it was like a $10,000 charge. It wasn't for our property. It was for like a new like a chiller or something that we caught. Um, and I mean that saved us a lot, but only because we went through our financials with a fine tooth comb. And so I highly recommend that. Um, and an accountant for a property management company might be working on 10, 12, 15 properties. And so, they don't know what's going on in the property. They're just saying what was marked by the property manager. So mistakes do happen. So you definitely want to go through that and make sure everything is right. And um, that really, really helps.
Yeah. You talked about visiting properties when you're trying to find a property manager. Do you like to drop in when they have your property? Do you kind of surprise them with a surprise drop in? And how often do you do those if you do?
Yeah, absolutely. I mean, we visit our properties consistently, at least once a month. Sometimes I tell them I'm coming, sometimes I don't. Um, and I'm trying to catch them doing something good. I'm not trying to catch them doing something bad, but I want to make sure they're running the property as as they know I expect it to be run. And so I can't always tell them I'm coming because I want to see how they're operating without me knowing I'm coming. And I want to go at night too. That's a really good sign. Like, is everything well lit? What's going on at night, because a lot of times your staff isn't there at night, and so you want to see what's going on. And visiting your property on a consistent basis, you're developing a good relationship with your team. They feel like they're getting seen, they're getting heard. um, you want to thank them. Property management like I said, a thankless job. Most of the time people are complaining. They're really saying, oh, you're doing, thank you for your hard work. I'm building a good community, or taking care of my unit. Most people are complaining like, oh, someone's in my parking spot, or someone's making too much noise, or this or that. And they have to chase down people for rent at times. So being there and listening to them, they're going to work harder for you. Like on 100 unit property, if you get 3 extra rentals a month, let's say at $1,200, because they're a little bit, they're going that extra mile for you, and your maintenance team is working harder for you. Over the, multiply that 3,600 times 12 months, divided by your cap rate, and less turnover for your property, you're creating $1 million on a 100 unit property by taking good care of your team. So that's a huge amount of money, and you could scale that up, you could scale that down based on the size of your property. So um, being there on a consistent basis goes a really long way on improving the value of your property.
You're obviously a value add investor. You want to share maybe some of your favorite value add strategies that you look for when acquiring?
Yeah, water savings. On our last property we bought, it didn't have any low flow on the property. So the toilets, when you flush them, use 3.5 gallons per flush. We changed that out to zero point 0.8 gallons per flush. So massive savings. We also put aerators on the faucets and shower heads. So this was a 256 unit property. We had a team come in and in 1 week did the whole property. We thought we'd save about 50% on the water and sewer bill. We're saving 75%. That's $190,000 of savings on that property. And if you divide it by the cap rate, we're saving over almost $4 million, which is insane. We've created that much value, $4 million. That's an easy one. We want to do low cost amenities. So dog parks are pretty inexpensive, and not sometimes the property doesn't have the room, but if you're at 80 units or more and you have the space, I mean, it might run you $13,000, and a heck of a lot of residents have dogs. So that's a really nice one to have. We've also added at one of our properties, we had patios, but no privacy wall. And so we added, it cost us $1,000 for a privacy wall. We're getting $75 rent bumps for those. So, that's going to generate over $100,000 a year at this property. So lots of different ways. You can do Amazon package locker. Sometimes you could you can get it for free, or you can pay for it and keep all the money. You could charge residents. It might be as little as $5 a month per resident, but it's freeing up your staff, not having to deal with packages. And it makes it super convenient to residents who maybe aren't around from 9 to 5. And so they might need to pick up their package after hours.
Couple others that I really like. I don't know if you use these or look for these, but one is the washer dryer hookup. Because if you can add a washer and dryer to the unit, you can probably charge another $25, and it'll take about a year or even more. Is that
Even more? I mean, you could get up to $75, and people love that, particularly on the 2 bedrooms or up. So yeah, if you can add washer dryers, that's a no-brainer.
And people forget that when you do own large apartment buildings, like if you have a 100-unit apartment building, you can buy those washer and dryers at a discount. You get sort of bulk pricing as well. So you can install those things, probably recover your costs within, I don't know, 12, 18 months or something. And then after that, it's just all profit divided by cap rate. You're adding a lot. And then the other one I like, which probably doesn't work as well. Well, that's not true. In your neck of the woods, it's so freaking hot. I'm sorry, when I say your neck of the woods, you and I are in the same neck of the woods, even though I never see you here. I used to live in Arizona as well. It's so hot over there, but I know a lot of people literally will put lines on the parking lot area to kind of create reserved parking. Do you do anything of that with sort of covered parking? Because again, I know there's a premium in Arizona of covered parking because it's a little bit cooler than if you're just parking in the sun.
Yeah, covered parking is great. You can sometimes charge. So on one of the properties, we added solar, and they wanted to do our whole parking lot, but we knew we couldn't do a charge a premium if they did our whole parking lot with covered parking. So we only had them do a little bit of the parking lot and did the rest on the roof of the property. And so we're getting a premium for that. If you can get a premium for spots near their unit, and it could be as little as $15 to $25, but that all adds up. All these little incremental things will add up and have a tremendous amount of value when you go to sell your property.
Cash was asking, do you recommend any playbooks on this value add and asset management? Any books or resources, playbooks? Obviously yours, best in class, I'm sure, is one of them. But maybe share some of the resources on how to approach the value add piece.
Yeah, the best in class right behind me. You could get on Amazon. You can go to our website. That's the only book I've seen out there really on asset management. And we have a ton of resources on there too. So just check the links. But yeah, asset management is something people don't talk enough about. They talk about how to get your first deal, but not what to do when you buy that deal. I also recommend being a part of a mastermind or some kind of investment group, because you could share ideas and resources. So it's done wonders for me. I'm still part of different groups, and I highly recommend that.
Yeah, you and I were both. Are you still part of Raud's group? We were both part of Raud's
Hey,
mastermind.
that's kind of gone by the wayside, unfortunately. But
Oh,
yeah,
it
that
has
was
it.
that was a
Rod
great group.
Cleaves. Okay, got it. Debbie asked, what's your opinion on keeping or filling a swimming pool for a property that has less than 50 units? I guess her property manager is concerned about difficulties leasing it if it's filled. Would you replace it with something else like a barbecue area or a dog park or something like that?
Yeah, I mean, I guess depends where the property is, but I mean, people like a pool even for a 50 unit. I would recommend keeping the pool. I know you've got to certainly take care of it and whatnot, which costs money, but for 50 unit, I would definitely keep the pool in my opinion.
I had Kathy Fetke on a couple of weeks ago on the show, and we talked about the importance of not growing too fast, but to sort of scale smart. She just came out with a book, great book, by the way. I think you share that philosophy too. Do you want to talk a little bit about some of the risks involved in growing too fast versus kind of doing it more on a more tempered pace?
Yeah, absolutely. You've got to build your team, and it takes time. there was this kind of fascination with like assets under management. Hey, I've got $100 million assets under management, or 200. There's this race, and slow and steady wins a race. If you want to be in real estate for the long haul, you're only as good as your last deal. So we just put our second deal under contract in the last 2 years. I certainly would want to do more deals than that, but we stay true to our criteria and just go nice and steady. You keep investing in your team, keep growing your team. I've in the past where we were looking to add more people, and we're interviewing people that have worked for these companies that just grew so fast, and they went from managing 8 properties to like 40 properties. And it was just, obviously you can't do that. There's zero asset management going on. It's just survival. And not that anyone on here is looking to get to, have that many properties at any one time right away, but steady, is the best way to go. Your investors will keep coming back. You have a couple of really good exits, and they'll be, they'll keep coming back and bring their friends next time as well. So do things right. And you're gonna be successful over the long haul.
Daniel was asking about KPIs. Danny, we talked about that a little earlier, so you may have to catch the replay on that. Let's talk about your book a little bit. I'm going to drop the link in the chat. Invest Smart: Spotting Red Flags in Real Estate Syndications. Let's talk about some of those red flags. Maybe the top 2 or 3, or the ones that may not be as obvious.
Yeah, and certainly I made those mistakes too when I started out and I invested in other people's deals. But I think a big thing is people follow the herd. Like if your friend invests in a deal, oh, it must be good. I'm going to invest with that person too. Do your own due diligence, because your friend might not have done his due diligence either and is copying another friend. So there's this herd mentality that a lot of people get into, and I'm guilty of it. So do your own due diligence on each operator, and also you want to check on their focus. So particularly these days, you see a lot of people adding asset classes or adding markets, and there's a lack of focus that they're doing. We just focus on a few markets so we could be experts in those markets. That gives me data, tons and tons of data. If I'm chasing a deal in a new place, like let's say Nashville, I'm not going to be an expert no matter how much I read up in the next 72 hours. I can never be an expert because I haven't seen the last 20 deals that came on the market that way. So focus. That's what you want to make sure when you're investing with someone. You want to make sure their track record. Not everyone, if you do enough deals, not anyone's track record is going to be perfect, but are they open and honest about the struggles they've had? We've all faced struggles. But how did they deal with it? How did they communicate with investors? And you want to ask to, maybe speak to other investors that they have as well, to see how they've handled tough times and how they've communicated, because that's really important as well.
Yeah, I've been talking a lot about that on the due diligence on the sponsor, to pay attention to not only their overall years of experience, but are they experienced in that asset class? Because a lot of folks are switching asset class. They're a master in multifamily, but this might be a self-storage deal or a mobile home park deal. So there better be somebody on the team that's an expert in that. And like, to your point, the market, I mean, like yours focused on the Phoenix, on the Tucson, and if it's a Phoenix market, but definitely Arizona. If you suddenly come out and say, hey, I'm going to start investing in Ohio, I'm going to be like, well, who's the team? Who's your boots on the ground? Like, what do you know about Ohio? So those are really critical questions. Cash was asking whether there's a PDF version of the book, or is that just part of Kindle? Do you know?
Yeah, you can buy it on Kindle. We'll have an audiobook. It should be out in the next week or 2, I believe. We're just waiting for the approval from Amazon, but we recorded it recently. Not me, someone else did it for me. Much better off that way. And yeah, check it out. And you can go to our website as well.
Yeah, Sean said I recently got Invest Smart, really good book. Rocky's asked it about, he says, would you do asset management if you were new to multifamily investing? I'm not quite sure. I mean, obviously you have to do asset management because So I'm not sure if you mean doing asset management yourself personally versus having somebody else on your team do it, but I'm just talking about the importance of asset management. I mean, it's critical.
Yeah, it's critical. It doesn't take any genius. You don't need an MBA. You don't need years of schooling. But if you're new to real estate investing, partner with others, because you're gonna let, even if you make zero money, or if it even costs you some money, learn from someone else. Like I partnered with people in the beginning, before breaking off to my own company, and that really helped me get from point A to point B. So there's value in others, so that you can share resources. It's great. It's comfort, no, going down the road with someone else. But obviously you want to make sure you're aligned with the business plan, you have aligned in values, and the type of person that you're working with. So that's very important. But as a newbie, don't go it alone. There's so many other great resources out there.
For those of you who don't know, Gary and I did it. This is the second time on the podcast. We actually met in New York, I think in early February. And in that interview, you said that the best time to invest in real estate is now. Do you still agree with that?
Heck yeah. Heck yeah. Because um once you have people paying down your mortgage, if you got to buy right, first of all. But now in particular is a really good time, because we're seeing interest rates really drop. I mean, on this, we've seen for us, I know the Fed dropped their rate 50 bips, but we've seen on our loan terms over 100 bip drop, because they're building in future rate cuts. So the cap rates are still high. So the going in cap rate is, I'm paying less for that property, but I'm getting really good debt. So now's a great time. And if you're a long-term holder, it's buy and hold, and asset manage the heck out of the property. And for a lot of people, they don't sell. And a lot of times they complain about the worst deal they did was a deal that they ended up selling. So we're more, we implement our plan, and we've sold, but we're looking to hold newer deals longer.
Yeah, and I want to give you props because you said this was back in February. It's about 7 months ago or 8 months ago. You said, or we were thinking that interest rates were going to be much lower and much faster than most people thought, and you were spot on. I mean, I think it was around 6.75, and we're talking about 30-year mortgage. It was about 6.75 when we spoke. It actually spiked up a little bit, but now it's down to just above 6. So it's at least a 10% discount from when we had our interview. Do you think that's a trend that's going to continue, or do you think it's going to flatten out a little bit here, or is this just a pause and we're going to see where do you think we're going to see rates? Are we going to see 5 handles?
Well, I'm sub 5 on a Freddie loan right now. We do a 2% buy down. But yeah, this is agency debt, long term, 5-year, and the longer you hold it, you're going to get a better rate. So it's a really good time, if you're not having to do bridge debt, to get really good terms. You're not going to get as much leverage as previously, but the leverage is still it's pretty decent.
You mentioned a 2% buy down. What does that mean for those who are just starting out?
Yeah, so let's say my loan was 10 million. I'm going to pay an extra 2%. So what is that? 200,000. So I can get more proceeds and a lower rate. And I'll make that money back in, let's say, a year. And then just because I've had that, I've got my DSCR is higher. There's many benefits to paying down your rate if it makes sense, if it matches your business plan. And so with a 3 to 5 year hold, for us, it's a no-brainer.
And does that make sense when the interest rates are going down, or what's the bet on that? I guess when does the bet pay off and when does it not pay off?
I guess it doesn't make sense if you're going to be, let's say, it's a big value add property, and so you may go bridge debt and sell or refinance in a year's time, because I'm not going to make that money back. But because I'm paying it up front, but the payoff will be, let's say, a year from now. that makes it's a no-brainer for me. But if it's a quick transaction, then maybe it doesn't make sense. But there's lots of manipulation that you can do on your loan. But you know, really talk to your loan broker on what you want to achieve and what you need, and really knowing like you know, for your investors. So what we did, you know, you can do max leverage, you could do 5 years IO, and we knew our investors want maximum cash flow. So we did 5 years IO for that property. So we're only paying interest only on the debt. We're not paying down um, the amortization.
Yeah, and I know we obviously we do the securities work for your team, but we don't do the transactional real estate. Is that something you would talk to your real estate attorney transactional when you're dealing with the loan, or is that just something you do on your own?
So my transactional attorney will negotiate with the lender as far as the contract, and really go over it with a fine tooth comb. You know, I'll certainly I'll go over it myself. And man, if you can't sleep at night, read a loan document, that will put you out.
More than a PPM?
Yeah, more than a PPM, absolutely. A PPM I can read. A loan doc, you're like, it gives you a headache. You're like, whoa, you know, it's torturous. But we'll work out the particulars as far as like strategy with the loan broker, and obviously we want their input as well. But you know, we've been doing enough where we kind of know what we want to achieve, and then the negotiation, or you know, any of the wording, I'll leave it up to my transactional attorney.
Leave it to Vessi to say she loves reading loan docs. Cash asks, how long are you seeing the 50 bips drop to be reflected in your term sheet? And are you saying it's immediate? Because you already, well, you did the buy down. Are you seeing the effects already, or is there a lag?
I haven't seen any effects yet because it was already built in. So we already got the lower rate before it even dropped. So I probably 100 bips have already been built in. That's why we saw that. So as rates continue to drop, we'll start seeing a little bit more of that. It'll affect more the bridge debt when you're dealing with SOFR and everything. That will have more of an immediate effect.
Yeah, don't forget, I think mostly it's probably more dependent on the 10-year interest rate than it is on the overnight Fed's fund rate. But like you said, I think that's baked in, and it's all about expectation. What do you think? Where do you think the Fed's going to be at the? What's your over under on in November? Is it going to be another 50-point cut or 25, or what are you thinking?
So someone on my team said he thinks it's going to be 50 in November and 25 in December. I think 25 and 25. I think, you know, the Fed has been so, you know, patient and conservative. I think it's 20, you know, 25, 25 November, December.
If you'd like to join us live on these episodes and have a chance to get your specific question answered, you can simply go to realestatesyndicatorlive.com and register to be live on the show. Hope to see you then.